Wisdom Podcast.
This is chasing wisdom. Real life, real money, real faith. I came up with a prayer and a plan. Kept my name on the line. This is chasing wisdom.
Real life,
Real money.
real faith.
I've been counting every step. Now I'm pressing through the noise. Hands up when the truth hit. I was built for this choice. This is chasing wisdom.
Real life,
Real money, real faith. Fade it out, then cut it clean. Chasing wisdom.
What up? My name is Rodney Loiston, and this is Chasing Wisdom Podcast, where we talking everything financial literacy, credit repair, and Jesus Christ. You know what I'm saying? I'm gonna drop these gems for y'all, give y'all this game, and chase this bag, and we're gonna get to the money together, and we're gonna learn all this wisdom and knowledge. You know what I'm saying? I'm gonna give y'all everything I got, and hopefully y'all implement it and y'all take it to the next level. So without further ado, we're gonna get right into it. So today we're gonna talk about business credit and buying a car in your business name with your EIN number. Alright. So setting up your business to be credit worthy is the foundation and the key to getting a car or vehicle in your business name. All right. While your business structure is gatekeeper to your vehicle financing, before any lender will approve a vehicle under your business name, they need to see legitimate structured entity, not just a dream or a side hustle. The most common accepted structure for business auto financings are LLCs or corporations, with S Corp or C Corps often receiving the most favorable treatment. Your business must be registered with your state and have active employer identification number, which is the EIN number for short, issued by the IRS, which serves your business equivalent of a social security number. Sole proprietorships are almost never approved for EIN-only financing because they lack the legal separation from the owner and the business. Think of your business structure as your resume. It tells lenders whether you are worth the risk. Your business entity structure is a single most important prerequisite before pursuing any vehicle financing in your business name. So you need to set up your entity first, whether you're going LLC, S Corp, or C Corp. You know what I'm saying? Stay away from the sole proprietor because this one doesn't separate you from the business. So it's not going to work, basically. Getting your EIN and your business documents lender ready. So, what you got to do for you to be ready for the lenders and for the lenders to be ready to extend to you? These are the documents and things. Your EIN is issued free of charge directly through the IRS website at irs.gov. You can obtain in minutes by completing Form SS4 online. Once you have your EIN, you need to gather what lenders and dealerships call your business package. This typically includes the EIN confirmation letter, your articles of organization or incorporation, your operating agreement or bylaws, and proof of business address. Many applicants are rejected not because credit issues, but because their documents are incomplete or inconsistent. Make sure your business name is spelled identically across every document, including your bank account, your state registration, and your IRS paperwork. Inconsistencies signal disorganization to lenders and raise red flags immediately. Now, in 2026, they updated the laws, and for the address, you can no longer do a virtual address with your business for funding. You know, so if you got a virtual address, your business will not be eligible to be funded. But the loophole to that is go ahead and get you a foreign entity because number one, you can't have more than one business getting funding in the same state. So if you do one in Florida, you're gonna have to start a new business somewhere else, and you can't use a virtual address. So what you're gonna have to do is actually get a physical address in another state and register as a foreign entity. So get you a little cheap spot, you know what I'm saying, and use it for your business address. That's your best move. Document consistency across all business filings is just as important as having the documents themselves. Lenders check for discrepancies, so they looking to make sure everything legit, everything matching. So you want to make sure everything is consistent across all your documents, from your state filings to your bank statements and all in between, your address, all that. Now, the next thing you want to do is open a business bank account and establish your business address. So, a dedicated business bank account is non-negotiable if you want to be taken serious by lenders. It demonstrates that your business has real financial activity separate from your personal finances. Most businesses, auto lenders will ask for 3 to 6 months business bank statements. So the earlier you open your account, the better position you will be in. If your business address, avoid using your personal home address if at all possible. Instead, I would say, but like I said, they updated recently. I would say get a virtual address, but now that method is no longer eligible. You know, people been running the game. They updating the laws and making it tougher. So now, like I said, register as a foreign entity and rent you a real property in a cheaper state that you can get the LLCs in. You know what I'm saying? Or a commercial co-working space, as these give your business a professional credibility signal. Banks like Chase, Bank of America, and Relay are popular choices for small businesses accounts and are widely accepted by lenders. Aim to maintain and consistently average daily balance of at least $2,000 to $5,000 in your business bank account to show financial stability. So you want to try to keep it $2,000 to $5,000 in that account. You know what I'm saying? Just to show you financially stable and, you know what I'm saying, get some green flags. So open your business bank account immediately after you form your entity, and every month, you know what I'm saying, the history counts. You know what I'm saying? You gotta have 6 months, 6 to 12 months of banking history, you know what I'm saying? So the quicker you open that account, the better. You go ahead and start building that history. Now, building business credit from zero is easy peasy, really, you know what I'm saying? So first you gotta understand the business and how the bureaus score your business. You know what I'm saying? So unlike personal credit, which is managed by Equifax, TransUnion, and Experian, business credit is tracked by Duns and Bradstreet. You know what I'm saying? So Experian Business and Equifax Business also, do the business credit. So those are the three bureaus for business credit. And these three business, these three bureaus are basically tracking on a different scale. They go by pay debt score, not FICO score. You know what I'm saying? And the pay debt score ranges from 0 to 100. And they reward businesses that pay invoices early and score 80 or above being considered excellent. You know what I'm saying? So paying off stuff early, that's all you got to do. Um, keep your score at 80 or above is being considered excellent. Experienced business uses its international score plus, while experienced business use its own payment index. The critical first step at Duns and Bradstreet is obtaining your Duns number, which is free and can be requested at dunsandbradstreet.com. Without a Duns number, you essentially do not exist in their system. Monitoring your business credit report regularly through nav.com or credit safe allows you to catch errors and track progress in your business as you build your credit, you know. So make sure you go to Duns and Bradstreet and get that Duns number so you can start building business credit on the business side. So you can obtain your free Duns number from Duns and Bradstreet. That's the first step to building your business credit and becoming a scoreable business. You know what I'm saying? So they can monitor and start watching you and start scoring you. After you do that, now you got to go to the tier method. You know what I'm saying? You going to the vendors to start building credit. Now, the vendor credit tier strategy is building credit without a personal guarantee. You know what I'm saying? So the fastest legitimate way to build business credit is through tiered vendor credit approach, starting with net 30 accounts from vendors who report to the business credit bureaus without requiring a personal guarantee. Starter vendors like Uline, Quill, Crown, Office Supplies, and Granger are well known in the business credit community for reporting to Duns and Bradstreet and offering net 30 terms for new businesses with minimum requirements. Once you have 3 to 5 vendor accounts reporting positively payment history, you'll become eligible to apply for store cards, such as those from Staples, Home Depot, Amazon Business. After building that second tier, you can pursue business fleet cards and eventually business auto loans. The key is to purchase small amounts from each vendor. Pay the invoices early or on time and allow at least 2 to 3 billing cycles to be reported before moving to the next tier. So start with the net 30 vendor accounts and pay early. This is the lowest barrier entry point to build a legitimate business credit line. And move up from that to the store cards. Once you move up from that, then you can be eligible to get auto loans, you know. Now let's talk about the facts, what they don't want to tell you. How long it take to build business credit and what to avoid. Now realistically, building business credit profile strong enough to qualify for an EIN-Only vehicle finance takes 6 to 24 months. So the gurus telling you they gonna help you overnight and they gonna get you this and that, don't listen because it take time. This is the credit game. It's the slow game, but it's the mo game. You understand? It's the slow game, but it's the mo game. What that means is it take time, but it's gonna get you more than trying to run fast and run into the wall. You know what I'm saying? So realistically, building this business credit profile takes 6 to 24 months, depending on how aggressively and correctly you execute your strategy. Many business owners make the mistake of applying for too many credit lines at once, creating multiple inquiries that signal desperation to lenders. Instead, apply strategically in space applications at least 30 to 60 days apart. You know, closing old accounts, missing payments even by a few days, or letting vendor accounts go dormant can all damage your business credit score significantly. Since business credit bureaus weigh payment timing very heavily. So make sure you making these payments on time. You know what I'm saying? Cause it's a big part. Now listen, never, ever mix your personal credit with your business credit. Listen, never mix your personal expenses, your personal credit, or nothing. Cause as commingling finances can pierce the corporation veil and eliminate the legal protections your LLC or corporation provides using a business credit monitoring service like NAV or TIFL allows you to watch your scores in real time and catch errors before they become problems. Business credit building is a marathon, it's not a sprint. Consistency and patience over 6 to 24 months beat any shortcut. Don't commingle your finances. Don't try to do the little shortcuts. You know what I'm saying? I know they say, oh, you work a job, run your direct deposit through your business account, commingling your finances. No. Now you actually getting taxed twice. So you finna pay twice on taxes. And as well as you have fake documented income that's not really income for the business, you know, and it's gonna affect you in the long run. You know, you commingling and eliminating your legal protections with your money. You know, you piercing the corporate veil, you know what I'm saying, the entity protection when you mix it like that. So you don't wanna commingle that. You know what I'm saying? Now there's two paths. You can go the EIN only way, or you can go the personal guarantee financing way. So there's two paths to getting this auto loan in your business name. What the EIN only financing really means and who qualifies. EIN only financing means the lender evaluates the loan application based entirely on your business credit worthiness, your paydebt score, business bank statements, time in business, annual revenue, without pulling your personal credit or requiring you to personally guarantee the debt. To genuinely qualify for EIN only financing, your business typically needs to be at least 2 years old, show annual revenue of 50,000 or more, carry a paydebt score of 75 or above, and have multiple established trade lines on file. Some specialty finance companies and credit unions that focus on fleet or commercial vehicles are more likely to offer EIN only terms than traditional retail dealerships. It's important to understand that EIN only does not mean no underwriting. It means underwriting is done on the business rather than your personal, eliminating personal debt. Claiming EIN only qualification prematurely is one of the most common and costly mistakes new business owners make. So you don't want to do this too early. EIN only financing is real, but it requires a mature business with documented revenue, strong banking history, and established credit profile. Now, the second way is the personal guarantee, and this is how it works. A personal guarantee is a legal commitment where a business owner agrees to personally repay the debt if the business defaults, basically like a cosigner. And if it is most common approval path for business vehicle financing when a business is newer or has a thinner credit profile. When you sign a personal guarantee, the lender may report the auto loan to both your personal and your business credit bureau, which means On-time payments can simultaneously build both profiles. Many entrepreneurs view personal guarantee financing as a stepping stone, not a failure. It gets them the vehicle now while their business credit continues to mature to get the best personal terms. You want a personal FICO score of at least 680, ideally 720 or above, along with proof of personal income, strong business revenue, and keep in mind that defaulting on a personal guarantee backed business vehicle loan affects your personal credit just as severely as defaulting on a personal auto loan. So, a personal guarantee is a strategic bridge. It's used to get the vehicle now while continuing to build your business credit and eliminates the need for one in the future. Now, choosing between lending and purchasing in your business name. When you buy a vehicle for your business, you have two primary financial options: purchasing outright or financing through a loan, or entering into a commercial lease, and each has different tax and credit implications. A commercial lease is called a business auto lease. Often has lower monthly payments and may require less money down, making it accessible for businesses with solid revenue but limited capital reserves. From tax perspectives, lease vehicles can deduct the standard business use from tax perspectives percentage method, while purchasing vehicles may qualify for Section 179 expensing or bonus depreciation, which can provide significant first year tax write offs for credit building purposes. A finance purchase is generally more powerful because the installment loan shows on your business credit report as a fully managed credit line. Before deciding, consult with a CPA to who specializes in small business taxes as a right choice depending on heavily on your business profile and profitability, cash flow, and intended vehicle use. So the lease versus the purchase decision should be made with a CPA. The tax benefits of Section 179 on a purchased vehicle can be significant financial advantage, which is what a lot of them telling you can write off. So if you trying to get deductions and stuff for your business, you trying to save money on tax end, getting a car and writing the depreciation off is a method that they use. I'm still learning about that, so I'm not gonna tell you too much. I'm not gonna tell you to go do it because you do have to sign for that debt. So, but I do know they use that method, to get that tax deduction. All right. So what you bring, what you say before you walk into the dealership, these are important things that we're gonna cover real quick. When walking into the dealership as a business buyer without preparation is one of the most expensive mistakes you can make. Salespeople are trained to maximize profit from the unprepared buyers. Compare your business buying package before you arrive: EIN confirmation letter, articles of organization, operational agreement, 6 months or 12 months of business bank statements, proof of insurance in the business name, and any business credit reports you have pulled from NAV or Duns and Bradstreet. This is all the stuff you're going to need in your package. Call the dealership in advance and ask to speak with the fleet commercial sales manager rather than the general sales associate, as fleet managers have direct relationships with the commercial lenders and understand business purchases. When you arrive, clearly state your intention. I am purchasing this vehicle in the name of my business and would like to explore financing options for my entity. This signals to the sales team that you are sophisticated and establish your terms from the beginning. Knowing your target vehicle, your maximum acceptable interest rate, and your desired long term before you arrive gives you a negotiating power. So always request the fleet or commercial sales manager. They have the access to the commercial lenders that general sales associates do not have access to. So those are the ones who gonna be able to help you get it in your business name. They got the lenders that's gonna give you the auto loan. Understand the finance and insurance process as a business buyer. Once the sale price is agreed upon, the finance and insurance manager will structure your loan and present it through lenders they work with. As a business buyer, you need to ensure the loan is titled in your business name and that the title and the registration reflect your entity, not your personal name. Review every document carefully before signing the buyer's order. The retail installment sales contract and the title application should all show the business name exactly as it appears on your EIN confirmation letter. Finance insurance managers will often present add-ons like extended warranties, gap insurance, maintenance packages. Evaluate these based on your business need, but know that everything in the financial and insurance office is negotiable. If you have financing prearranged through the credit union or commercial lender, you have the right to use them instead of the dealer financing, which can often result in better terms. Asked explicitly, is the loan reporting to my business credit file or my personal credit file? The answer matters significantly for your credit building strategy. So before you sign anything with the finance insurance agent, verify that your exact business name appears correctly on the documents and the title and registration and things. And make sure you ask and make sure that they're putting it in the business name and not your personal. So after you purchase, insurance, tag strategy, and protecting your assets. After you purchase a vehicle in your business name, this immediate thing you gotta do. So immediately secure a commercial auto insurance policy in the business name. Personal auto policies may not cover vehicles used for your business purposes, leaving you financially exposed in the event of an accident. So you got to know that you got to get the commercial auto insurance. Commercial auto insurance typically more expensive than personal coverage, but the premium is fully deductible business expense, which often is a significant portion of the cost. Keep meticulous mileage records using the app like MileIQ or Everlance, documenting every business trip with the date, destination, and purpose. The IRS requires the documentation to support vehicle expense deductions. If you plan, I mean, if you plan to use the Section 179 deduction to claim actual vehicle expenses, work with your CPA to complete the form 4562 correctly on your business tax return. Finally, make every loan payment from your business bank account on time or early. This payment history is the foundation of the business credit you will use for your next vehicle purchase or your first commercial real estate loan or your next major business investment. So making every payment on time through your business bank is not just good for your financial hygiene, but it's actively building your business credit profile and getting you ready for the next round of funds and the bigger money that you want to get access to. You know what I'm saying? And that's how you get a vehicle in your business name and not your personal name, which is the EIN only, you know. So I hope y'all taking notes. I hope y'all enjoying it. I enjoy doing it for y'all. I am Rodney Lordston, and this is Chasing Wisdom Podcast. Let's get it.
Yeah. This is chasing wisdom. Real life, real money,
Some Wisdom Podcast.
real faith. I came up with a prayer and a plan. Kept my name on the line. This is chasing wisdom.
Real life,
Real money.
real faith.
I've been counting every step. Now I'm pressing through the noise. Hands up when the truth hit. I was built for this choice. This is chasing wisdom.
Real life,
Real money, real faith. Fade it out, then cut it clean, chasing wisdom.